I didn't really think I needed Bitcoin. It wasn't an institutional grade asset. I wouldn't have thought about that. And our business was about selling enterprise software in order to manage information, which was analytics. And that was it. I didn't really think about it again for about 8 more years or 7 more years. And the second time I thought about it was during a war.
As Bitcoin continues to get more attention in the financial world, new opinions from experts give us a better idea of how it will behave on the market and how much it will be worth in the long run. The CEO of MicroStrategy, Saylor, gives a strong argument for Bitcoin's use as a digital object and its long-lasting safety features. In his most recent interview with podcaster Antonella Marti, he talked about how these observations paint a full picture of how the Bitcoin market works and what its true value is. Michael Saylor, CEO of MicroStrategy, looks at how Bitcoin's price changes and what it does as a digital currency. He talks about how Satoshi Nakamoto created cryptocurrency as a way for people to send and receive electronic cash. It has a 21 million coin limit that is enforced by advanced microchip technology and is open to everyone. He talks about what makes Bitcoin special, like how strong and safe it is, and uses the $60 billion in unclaimed coins in Nakamoto's wallet as an example. This strength shows that Bitcoin could be a safe way to store value, even if its price changes. Read parts of the interview to get a better idea of what Michael Saylor and Antonella Marti talked about. Please like this video, subscribe to the channel, and turn on post alerts to get more videos like it. Enjoy the video.
You know, what I thought about Bitcoin when I heard about it the first time is probably what somebody in 1905 thought when they heard that someone in their neighborhood was playing with electricity. And then somebody's house burned down and someone got shocked and they got electrocuted. I thought, it's kind of dangerous, but they're probably not going to let people keep doing that, or I don't know what'll happen. And then I switched back to whatever I was focused on. It was, so when I heard about Bitcoin, it must have been 2011, 2012. It was very new. And it was one of 100 things. I was fascinated by the mobile revolution. I was interested in iPhones. I was interested in smartwatches. I was interested in everything Facebook was doing, everything Microsoft was doing, everything Google was doing, everything Amazon was doing. And also there was the Bitcoin thing happening. And they were all just flickering. But, you know, in my personal investments, I didn't invest in Bitcoin. I invested in Apple and Amazon and Facebook and Google. And in my business life, I didn't really think I needed Bitcoin. It wasn't an institutional grade asset. I wouldn't have thought about that. And our business was about selling enterprise software in order to manage information, which was analytics. And that was it. I didn't really think about it again for about 8 more years or 7 more years. And the second time I thought about it was during a war. And so I said, you know, why do people embrace new paradigms? Well, right? You need a near-death experience, a mortality experience. When I give you a diagnosis and I tell you, you know, you're going to die of this disease, you all of a sudden go back to the internet, you start researching the disease, and if you find that there's some kind of experimental therapy, you read up about it, maybe you get on a plane and you fly somewhere to do something about it because you have more to gain than to lose, and you're quite motivated. So in March of 2020, the pandemic struck. The world locked down. The world kind of turned upside down. All the offices were emptied. People started working from home. The monetary system went haywire. Interest rates went negative in large parts of the world. There were $18 trillion of negative yielding debt floating around. Like, how does money be negative yielding? And the interest rates in the U.S. were lowered to 0. And so I thought the cost of capital went to 0. I think that's like making time stop, or making, you know, negative yielding money is like making water flow uphill. And I thought, okay, well, I'm in a world where time is flowing backwards, water is flowing uphill. You ever see those movies of all the people on the beach just before the tsunami hits, and there's a tidal wave coming, And it's all just fine, and the sun is shining, and everybody's having a good time. And then the water starts to recede, and it goes out half a mile. Then the entire world's about to turn upside down. You're about to get struck by a 50-foot or 100-foot wall of water, and you have to run for your life. And if you look at that and you say, there's something really profoundly wrong, but I can't keep on going business as usual. I really need to take urgent action. That's what I felt in March of 2020. And I think I wasn't the only person that felt it. A lot of people felt quite concerned, distraught. Our first thought was, what do we do about, our people, our employees and our customers, and then how do we run the business? And then after that, we realized that we were sitting on $600 million of cash that was yielding zero. The central banking system was pursuing a policy that was very inflationary.
Michael Saylor says Bitcoin is a digital form of capital that offers a safe, unchangeable savings account so that people can build their lives on solid ground instead of sand that sinks. Bitcoin protects you from inflation, bank takeovers, and value drops by the government. As a result of inflation, workers' work is worthless, so companies can make a lot of money by investing in Bitcoin, which is a safe product that could go up in value. Bitcoin is like building on granite. It's a strong base for growth. Saylor says that Bitcoin is a good option to traditional assets because it gives people and businesses a safe place to keep their money and make money over time. Let's go back to the talk and watch some more clips to find out more from Michael Saylor.
We're going to pump a lot of currency, a lot of dollars into the system, and it wouldn't be noticed immediately, but we were going to have inflation, if not hyperinflation. If we take Argentina, for example, the peso was 20 pesos to the dollar in 2018 or so. I remember it because we used to obsess over it. It must have been 40 or 50 to the dollar by 2020, and of course today it's 1,050 on the blue dollar rate. So I could see that there was going to be currency collapses all around the world, and I could even see the U.S. dollar collapsing or weakening. In my opinion, actually, I think if you look at a surrogate for the strength of the dollar, it'd be the S&P 500 index, and it is 50% up, which means the dollar lost like 35-40% of its value since that time, measured in a portfolio of desirable assets. So I looked at that and I thought, well, our cash is a melting ice cube. It's worth 500 million right now, but it's not going to be worth 500 million in 4 years. And our business is under stress. We're locked in our homes. And people are working via Zoom. It's hard to grow the business P&L, and it's hard to see the employees. So on one hand, my human capital, my people are going to be raided by the big tech companies like Amazon and Google and Microsoft. And it used to be that people like to come to the office and they like to work together, and they're not going to just quit and move across the country for a new job. But in June of 2020, it was clear people were going to be working from home for a while, and you don't have to move across the country. You could just point your web browser or point your Zoom at a different TCP/IP address and get a new job. So we started thinking, this is not good. We may lose all of our employees. And then we looked at all of our cash, and on one hand, our cash was earning 0% interest, but the S&P index rallied and stocks were hitting an all-time high, and it was pretty clear that financial assets were going up, and the cost of capital is like 12%. If the cost of capital is 12%, if I have to generate a 12% return on my capital, I'm generating a 0% return for the next 4 years. There's going to be a shareholder revolt. So we were worried about losing our employees, and we were worried about losing our shareholders, and we had this big pile of cash which was worthless. And then the central bankers said, we're not even thinking about raising interest rates. And some central bankers said, well, we think we should make interest rates negative. So our primary asset was a liability. Our human asset was maybe going to drift away from us. And our shareholders were unhappy. And the stock, hit $90 a share. It was maybe 100 to 120 when we were thinking this through. And we were, in the midst of the war on COVID and what I think was a currency war, a war on capital. When someone says, I'm going to charge you 1% for all your money in the bank, that's pretty close to a war on capital, right? In that situation, we had to choose between a fast death, a slow death, or taking a risk, right? That is the essence of the paradigm shift. What's the fast death? The fast death is give the capital back to the shareholders. If we simply bought the stock back, we would have a company not growing with the employees working from home with no shareholders. And the stock was trading $2 million a day and no volatility. And so if there's no volatility and there's no liquidity, the stock options are worthless. But the stock options are how you compensate your employees. They're going to get hired away by the trillion-dollar companies that have infinite money and have stocks and companies that are growing and stocks that are stock options that are valuable. So giving the capital back would just make us die fast. We'd have to sell the company. The slow death is keep the capital, but the stock options are worthless. The human capital bleeds off. The shareholder base bleeds off. We get lost, right? And we can't crawl out of that. There's just no catalyst to get out. How do you work harder? I mean, we were working as hard as we could together, and then pretty soon we were all stuck in our kitchens trying to work through a little Zoom link, and that was not better or easier. The issue is, what do I do with $500 million? What do I invest it in that's going to yield more than the cost of capital? It's the summer of 2020. You need to find something to buy that's going to appreciate in price or in value more than 12% a year after tax, or in a tax-deferred, tax-efficient fashion. It was not bonds. You couldn't buy any individual set of companies because companies are securities, and there are prohibitions on a publicly traded operating company holding more than 40% of its liquid assets in securities. So we couldn't just buy all securities. So then you got to buy commodities, but every commodity is generally inflationary. Buying silver or soybeans or petroleum or natural gas or timber, those aren't good stores of value because people keep making more commodities. The king of commodities is gold, but gold supply increases 2% a year. And so gold itself is not outperforming the S&P index. You can't, so that wouldn't work either. So then we started thinking, can we buy real estate? But how do you buy a liquid portfolio of $500 million worth of real estate? And the problem was, real estate's valued based upon interest rates. So if interest rates go to zero, real estate values triple.
Michael Saylor's idea of a digital gold standard shows how important it is to have a safe and reliable digital asset in a time when prices could fall. He sees Bitcoin as a new kind of magic gold. His point of view becomes even more important. Saylor has long said that Bitcoin is a better way to keep wealth than traditional assets like gold, because it is decentralized and there are only 21 million coins. Saylor's idea that Bitcoin protects investors from volatility while they navigate the current rough-end conditions is backed up by market facts, like the recent changes in Bitcoin's price and the swings in USDT withdrawals, which show that the crypto market is still uncertain. Even with these problems, if Bitcoin's value stays the same or even goes up, it will prove Saylor's point that it is a good investment in this digital world. The things Saylor said and how Bitcoin has done will become even more important as the cryptocurrency market grows. Now the question is, what do you think is the best thing about Bitcoin as a way to store value, and how might it affect your future finances? This could show if his idea of magic gold can really live up to its claim of being a safe and stable way to store value even when the market changes and fashions change.